Planet Labs is down 60% from its all-time high. The CEO sold $5 million in stock last month. The CFO just sold another $1.6 million, and the company blocked satellite imagery at the request of the US government during the conflict in Iran. And you guys should know me by now. I'm not going to pretend like these things didn't happen. Today, I'm going to tell you the honest truth about every single one of them, and I'm also going to tell you why I'm still holding every single share that I own. Welcome back to Guts Capital, where it takes guts to invest in what others overlook. I'm your host, Jared, and I cover Planet Labs and the space economy with full transparency. That includes the good, the bad, and the ugly. Now, before we get into things, do me a favor by hitting that subscribe button. And if you learn something new, you can also hit the like button. And as well, turn on your notifications so you'll be the first to know whenever I drop a new video. Now let's get into it. Let's start with the price action because I know that's the main thing on everyone's mind. Planet Labs hit an all-time high of $51.76 on May 28th. Today, the stock is trading around $21. That's a 60% haircut from the top. The stock is currently sitting below all three moving averages and is trading at a 2.07 beta, meaning that it moves twice as much as the broader market in either direction. When the market sells off, Planet sells off harder, and when the market rallies, Planet rallies even harder. The long-term picture is really important here, and especially when you zoom out to spring of 2025. This is where the stock experienced a similar 60% haircut, where it was trading at, well, just over $6 and it dropped to just around $2. And since that point, it rallied strong all the way up to $51, where it made its all-time high. So yes, a 60% pullback is painful, but if you bought anywhere around that time, you're still sitting on some nice gains. So it just proves that context means everything. Now we can address the other elephant that's in the room, because I've already covered the CEO selling in my last video. Now the CFO has sold also, and I'm sure some of you are concerned about that. CFO Ashley Johnson sold over 75,000 shares on July 23rd at an average price of $22.08, generating approximately $1.6 million. Following the sale, she still holds 1.13 million shares worth approximately $25 million. She reduced her position by 6.2% while maintaining 93.7%. Combined with Will Marshall's sale last month, so two executives selling a decent amount of shares in the same month does seem alarming on the surface, but like I said in my previous video, as we dive deeper into it, it's not as concerning as it seems. Both sales were pre-scheduled under Rule 10b5-1 trading plans established last year. These plans exist specifically for executives to sell stock without the accusation of insider trading. They're not discretionary, they're not panic moves, they're planned transactions. Will still holds $70 million in Planet stock, and Ashley still holds $25 million. So if either one of them thought that the company was in trouble, I highly doubt that they would still have that much of their money tied into the stock. And that's the most honest signal I can give you at this point. Now, this is a story I haven't seen any other retail investing channel cover yet, and I think it's important for us to talk about. SF Gate published a deep investigation this week, revealing that Planet Labs blocked the release of its satellite imagery of the Middle East from March 9th to July 1st. This was at the request of the US government during its bombing campaign against Iran. When the bombing resumed on July 10th, Planet temporarily reinstated image delays over Iran, Pakistan, Afghanistan, and other neighboring countries, and that nearly all of the previously restricted imagery has been released into their archives. My personal take on this is that Planet has built its reputation on transparency, making satellite imagery of the world accessible to news organizations, nonprofits, and researchers. That transparency mission is genuinely being tested by their growing dependence on US military contracts. That tension is real and is worth acknowledging. But on the flip side of that coin, the same defense and intelligence contracts that are causing that tension are the same contracts driving 65% revenue growth. The US government, including the Pentagon, the NGA, the Navy, the Missile Defense Agency, and NATO are Planet's most important customers. In a world where military space defense budgets are literally doubling, according to the Space Foundation's July 2026 report, Planet Labs is positioned at the center of that spending wave. The transparency tension is a real risk to track, but it's not a business-ending problem. And Planet has shown that it can navigate it. They've released nearly all of the restricted imagery and are continuing to operate globally. While all of this is happening, Planet Labs secured another significant government contract. The Scottish Government's Agricultural and Rural Economy Directorate selected Planet for a one-year seven-figure award to support Scotland's agricultural reform route map. Under the agreement, Planet will deliver Planetscope data and advanced AI analytics to help Scotland develop sustainable food production, increase biodiversity, and reduce carbon emissions. The contract was secured through Planet Reseller Computer Center. Planet now has active contracts with Scotland, Wales, and England's Rural Payments Agency simultaneously. The entire United Kingdom is becoming Planet's customer at the government level. Combined with the new London office steps away from Westminster, Planet Labs is becoming embedded infrastructure across the British government. That's exactly the kind of sticky revenue relationship that compounds over time. Okay, so now I want to give you three numbers that matter most no matter what the stock price is doing. Number one, a backlog of $906 million, growing at 143% average annually over the past 2 years. That's contracted future revenue already locked in, and it continues to grow even if the stock price falls. Number two, EPS improving at 50.5% annually over the past 4 years. The company is consistently getting closer to profitability every single year, and the trend is not reversing. Number three, free cash flow margin expanded 59.8 percentage points over 5 years. Trailing free cash flow margin is now 13.9%. Planet is generating real cash from its business operations. Stock Story published an analysis this week highlighting these three metrics and describing Planet Labs as a company where an EPS inflection point could be coming soon. When a company is improving free cash flow and EPS simultaneously while growing backlog at triple-digit rates, the stock price declining 60% creates a very different picture than the business declining. Here's where Wall Street stands on Planet Labs right now, because the Analyst picture tells a story the current price doesn't. Wedbush initiated coverage with an outperform rating and a price target of $50. Craig Hollum has a $49 buy target. Northland Securities has a $50 target. Deutsche Bank has a $36 buy. Goldman Sachs, the most skeptical of the group, raised their targets to $25 and maintained neutral. The consensus average price target across all three analysts is $35.36. The stock is trading around $20, so even using the consensus average, which includes the most bearish voices, analysts are seeing a 75% increase from current prices. 6 analysts have buy ratings, 4 have hold ratings, and 2 have sell ratings. So even after a 60% pullback, the bears are the minority. Now it's time for a position update and where I stand personally. My average is around $24, and the stock is obviously below my cost basis. And that's the first time I've been in the red since I've started this channel. And I honestly don't see a reason to sell, mainly because the fundamentals and the thesis behind the company is still intact, as well as the stock price going from $50 down to $20 while the company continues to execute isn't a thesis break, it's a reset. And like I said earlier, this isn't the first time the stock has experienced a 60% retracement. In times like this, I have to be honest with myself and ask, has anything changed with the company since I bought in? And the answer is no. The company has actually gotten stronger since that time. And holding through drawdowns is the hardest part of conviction investing. It's why most people never build real wealth in the stock market. They buy into strength and sell into weakness, which is exactly the opposite of what you're supposed to do. And I don't plan on doing that here. I started Guts Capital because I believed in this company when almost no one was covering it. I covered it at $22, I covered it at $50, and now I'm covering it at $20, and the thesis hasn't changed. The conviction hasn't changed either. The only thing that has changed is the price. And lower prices on a strong business screams opportunity, not crisis. All right guys, so as we wrap things up, Do me a favor and hit that subscribe button if you found this video valuable. You can also drop a comment down below. Let me know your thoughts on what we talked about today. Are you buying here? Are you holding? Or did you sell? Either way, I'd love to hear it down below. We can start a little conversation, as well as hit that like button just to help push these videos out into the algorithm. I'll greatly appreciate it. And like always, guys, I'm your host, Jared, and you're watching Guts Capital, where it takes guts to invest in what others overlook. I'll see you in the next one.